Okay, so today we are going to be discussing about the inverted head and shoulder. Remember, at the end of the day, everything still boils down to chart patterns, right? We said possible reversal patterns too. So one of the popular, of course, the last time we treated the normal head and shoulder, and we said we spot that at the end of an uptrend, which likely might signify the beginning of a downtrend, is it not? And we said the market needs to break the neckline for you to have that. But in this case, you see this pattern in a downtrend, meaning the market must have been trending all the way down. Market must have been moving down, but remember the market does not move in a straight direction. So this market must have been trending down. Sorry, let me try and draw that. How do I move this? Don't mind my drawing now. Okay. Are we together?
Yes,
Are we
ma'am.
together? If you can
Yes,
send
yeah.
one on the chat box. Okay, great. So just like opposites of what we had the last time. And if you pay attention very well, remember you said this inverted is spotted in a downtrend. You will see the points probably where your downtrend line got broken out of. This move, this head move, will most likely break out of your downtrend. The right shoulder is what is forming like a pullback, and then it goes. So first, you're going to have lower highs. Remember, in a downtrend, what's the market making? Series of lower lows, right? And lower highs. So after the last low, it's going to make like the lowest low points. And that's going to be like the edge. This time around, you can see it's like, when you say it's inverted, it's facing up. Remember the last time we're treating head and shoulder, that one was facing down, right? So this is the head pattern. This is the left shoulder. The left shoulder. And of course, this is the right shoulder. Notice the right shoulder now, of course, is not as high. Are you paying attention, Sabina? The last move up is not as high as this lowest one. I don't know if you get what I mean. The right shoulder would be higher than this head. And you see this one was way low. This was the lowest point. So they are not going to be on the same level. No, it has to be something like this. This is a neckline also. Pardon that my drawing was not really straight, right? So this time around, of course, the market must have broken through the downtrend for you to form the right shoulder. So write this down. Let's write this down. An inverted head and shoulder pattern. An inverted head and shoulder pattern. An inverted head and shoulder pattern is a trend reversal pattern, comma, is a trend reversal pattern. That is spotted in a downtrend. That is spotted in a downtrend which indicates the buyers are likely to begin to push prices up. Indicate that buyers are likely to begin to push prices up. First off, when you say buyers are likely to begin to push prices up, what it means is buyers are now in control. There is a possibility that if they break this neckline, they might push the prices up, right? Full stop. Have you written that? Now, right. Note. When trading the inverted head and shoulder pattern, comma, you need to take into consideration the long-term trend of the market. Full stop. That was the same thing I said in the last class. Let me know if there's anything you want me to repeat. Remember, I told you in the last class that just because you spotted an head and shoulder, but in this case, just because you spotted something that looks like, oh, an inverted head and shoulder, is not a guarantee that the market will start buying, right? Because even the pattern may fail. Remember, I told you in the last class that let's say you had an existing trend. Maybe this downtrend you're seeing has been forming for a year, meaning for about 12 months now. The market has been respecting this downtrend. It's going to the downside, very strong one. Then I now see an inverted head and shoulder pattern that formed in a span of 2 weeks, meaning shorter candles. There's probability that that might fail, right? That's what I mean. So when I say just because you spot this inverted head and shoulder does not necessarily mean that the markets will keep going up, right? So you want to consider other things in addition to it before you just say, oh, I've spotted an inverted head and shoulder and I want to start trading. So now let's write, how to trade the inverted head and shoulder pattern. How to trade the inverted head and shoulder pattern. How to trade the inverted head and shoulder pattern. How to trade the pattern. Are we together? Let me know. Drop a 1 if I should proceed. How to trade the pattern. Okay, great. Number 1, you can look for a build-up. The build-up still almost similar to what we had the last time. Look for a build-up around the right shoulder. Look for a build-up around the right shoulder. Let me adjust this very well. Look for a build-up look for a build-up look for a build-up around the right shoulder. That breaks the neckline. That breaks the neckline to the upside. Look for a build-up around the right shoulder. until it breaks the neckline to the upside. I'm just taking that again. That is, you can now write for further clarity. That is something that looks like a short ranging market that keeps moving up till it breaks the neckline. Trying to draw that range right now. Full stop. Let me know if you're there so I can continue.
Sorry.
Please, I stopped at short ranging market, something that looked like a short ranging market.
Yes, I said look for a build up. The build up means to look as if the market is just going up gradually. It's coming down like a range. Remember what you expect in a range. Buyers and sellers keep knocking the prices within a range. But this time, each range is looking higher than the last range. Like it's going higher, a bit higher than the last range. I'm trying to draw a range to give an instance of a build up. Good. You can see the market looked as if it was moving sideways. This is an example of a build up, right? And then at some point it gets here and then it breaks outside, right? To form. So all of this move indirectly, this was like a build up. Can you see like a small build up? That was a range of the market, but each range kept moving a little bit higher until it broke out. I think there was a trend I saw this on. I think was it USDC. If I'm going to go check again, I can't remember on the bigger time frame. I think it was a build up. I'm not sure. I can't remember if it was happening again until it broke out. So in this instance, you know, I told you most normally people put their stop loss. This pattern will be invalidated. Of course, when the market comes back, as when the market comes back and break above this head pattern, what it means is it's no longer buying, is it not? It means it wants to sell. So that's why most people will put their stop loss just below the head pattern. But you know, I always tell you, for me, that's too wide of a stop loss. So this is what I do. In a scenario where I have the build up like this, if the market breaks this head and shoulder pattern as if it was ranging, my stop loss would be just below that range. Do you get it? Just above that build up, below it, my stop loss would be somewhere here, of course. And when you're picking your TP, you know how to do that. When you're doing your TP in the market, you know it's the next zone you want to put your TP, right? So I don't expect anybody to be asking me, oh, where would I take profits? When you buy, where is the next resistance above you? That's where the market will first respect before it moves higher. So that's how you drew your TP. Do we understand? If you understand, put a 7 on the chat box. Put a 7. So this way, like I said, it increases your risk to reward ratio. That's number one. So number one, where we trade, I said, is looking for a build up around the right shoulder until it breaks the neckline, because this pattern is not valid until this neckline is broken, right? Until it breaks the neckline, because in the past, that neckline was a resistance. You can see once, twice. So you want the market to clearly break it, all right? So you can enter back on the retest, or you join immediately it breaks out of that range. That's number one. Number two, way to trade it. You can sell a retest. You sell the retest of the neckline. You sell the retest of the neckline when it get broken. That's the retest method. You sell the retest of the neckline area. You sell the retest. You sell the retest of the neckline area. By neckline area, I mean the supports. I'm sorry, the resistance. You sell the retest of the neckline area. First off, note, ensure you get your candle for a confirmation. No, ensure you get your candle for a confirmation. What do I mean? In this instance, the market breaks this way. What's happening? Why is it refusing to move? Sorry, just hold on. Don't know why it's not bending in the direction I want it. This is my screen. Let me pick another one. So June. Okay. So let's say there was a candle that broke this neckline area, right? Maybe you missed the break. What you want to do is for the market to pull back into this same area so you can join the buy again. This is a normal retest I'm talking about. But in this case, when the market pulls back after I broke the neckline, of course, before you buy, remember, we are now at a resistance that became support. So how do we trade breakout? Like I taught us before, you want a candle pattern that is going in your direction. So let's say after it came back for the retest with strong momentum, and I see the candle close, probably I saw a bullish pin bar, right? Or I'm seeing an engulfing candle, all right? Or even a possible doji. Remember, I prefer engulfing patterns and the pin bars more, right? I would enter for the buy. This is like saying it came back for a normal retest. Do you understand? So when it gets there, don't just jump in and say, oh, because they said we should buy. No, you want to be sure that the candle that came in here closed right above that structure, not back into the structure. So, and of course, once you see your signal pattern for an entry, you pick your entry and join. And unconsciously, if you take a look at it, you will now see that you most likely will be having an uptrend already forming. Do you understand, ladies and gentlemen?
Yes, ma'am.
Yes.
So that's how to trade it. Now, I'm not expecting somebody to come and ask me later, oh, what do you mean by build up? I just explained that build up is the one that looks as if the market ranged until it broke out of the trend line. Then your normal retest is the normal retest you always trade before. A break and a retest, normal. The candles push back there into that same zone it broke out from. And the third one is the one that looks like a flag pattern. Remember I told you there is the one that looks like a flag pattern the last time. Who remembers? So write this down under the flag pattern. You can write the first pullback or the flag pattern. 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 Let me explain that. So write this down. Sometimes, sometimes the market might not retest fully back to the trend line, fully back to the neckline, sorry. It might not retest fully back to the trend line, the neckline after a breakout. It might not retest fully back to the neckline after a breakout, and you could get small bodied candles indicating the retracement. Small body candles that indicate a retracement. small body candles that indicate a retracement, which looks like a bullish flag, comma, which looks like a bullish flag, comma. In this scenario, you can buy when the market breaks outside of the flag pattern. Excuse me, you can buy when the market breaks above the flag pattern. Full stop. When the market breaks above the flag pattern. Full stop. Are we together? If you're together, please indicate. Are we together? Let me
Yes,
know if I
yeah.
should proceed.
Yes, ma'am.
Good. So in this case, your stop loss, note, pay attention to the screen right now. Your stop loss in this scenario will be just below this flag pattern, the lowest point of that flag pattern, where you got to. That's where your stop loss is going to be. Oops, comment, sorry. Around there, you can see that flag pattern where I just tried to highlight on the screen right now is where you're going to have your stop loss just below the flag pattern right there. Notice in this scenario, can you see this pullback did not get to the neckline, right? But you were seeing series of pullback candles, meaning in this case, because you were buying, the pullback candles will be short sell candles, like short sell moves that keeps going lower. But the point you will know the flag broke out, you'll see a candle that will close right above this eye, the highest point of the flag. Once you see a candle close above it, you join immediately. Once the candle closes above of it, that's your entry. That's your entry area. Do we understand? That's how to trade. So in this case, this will be your entry for the flag pattern. And then your stop loss will be just below that flag. Stop loss will be below it because you were trading based on this flag pattern. Are we together? Because it's not every time the market
Yes,
breaks
yeah.
out that it comes back. So in order for you not to miss out, of course, the next thing I'm going to be teaching you now is also the flag pattern. So it will make it more clearer. But do you understand how to trade the head and shoulder pattern right now?
Yes,
Yes.
ma'am.
Good. So that's just it. Right? You let the market create series of lower lows, meaning you must have encountered. So like a form of a recap now to summarize everything we've just read. One, the inverted head and shoulder pattern is a reversal pattern that you find in a downtrend that lets you know that buyers are most likely about to push the prices up because there will be a breakout, right? There's a breakout of the existing downtrend. You can see in this scenario, it broke out of this was the left shoulder, the head, which was the lowest point, and then you have the right shoulder. So that's the number one thing. For the right shoulder to form, there must have been a breakout already, indicating that a possible reversal. But is that all? No. You also want to consider, like I told you, you also want to consider the long-term trend as against when you saw the pattern. Then apart from that, how do you now trade it? You can wait for the market to break the neckline, enter on a normal retest when it comes back, then confirm with your entries for candle pattern. Or if it breaks with a build up, simple, just put your stop loss just below the build up on the right shoulder, right? And trade it. That way it increases your stop loss as against your risk reward ratio, what you want to get. And the final thing, of course, is you could also trade after the breakout of the bullish flag. If you understand this pattern right now, put an 8 on the chat box. Put an 8 on the chat box. Put an 8 on the chat box if you understand. Good. So what you need to do is just when you're looking for this pattern, that will be your assignment. Just look out for downtrends that got broken. So when you see a downtrend that broke to the upside and started forming an uptrend, just look for the left shoulder, look for the head, which is the lowest point, and look for the right shoulder. If the pattern is there, you're going to see it. It's simple. It's not hard. It's just the opposite of what you did for the head and shoulder. Okay, now let's go into the flag pattern. If I were you, I'll screenshot, I'll screen munch this, but of course you can always have access to the video. So flag patterns. I'm sure even with what we just learned, we are not totally new to flag patterns anymore. And you normally find these flag patterns in the market. Remember when we learned about Fibonacci, we are always waiting for the market to pull back to that 61.8 area for a retest, right? But how many of you have noticed that it's not in every scenario? There are some markets when they are really, really trending with very strong momentum, you're seeing big candles. You just notice that the momentum is so strong, it's not coming to retest around 61.8.
Yeah.
How many of you have noticed that?
I've noticed it.
Good. So in such cases, what you might most likely find is what we call a flag. So at that point, you can now decide to trade the flag pattern so that you don't get to miss out on the total move in the market. So write this as a subtopic right now. You know, now we're talking about the flag pattern. Flag pattern. So write this. A flag pattern can be said to be a weak pullback. A flag pattern can be said to be a weak pullback in an existing trend. Full stop. A weak pullback. I say the pullback is weak. What it means is the pullback is short. You most likely see short candles. A weak pullback in an existing trend. Full stop. Are we there? So
Yes. Yeah.
Yes, ma'am.
you're going to find, full stop, write this. That is, you will find a strong trending move. That is, you will find a strong trending or impulsive move. Remember, every trend has two moves. So the first one, you find a strong impulsive move. Strong impulsive move with large bodied candles. And then the candles of that impulsive move are going to be very large. Large bodied candles, comma, followed by a very weak pullback as indicated in its short candles. As indicated in its short candles. As indicated in its short candles. Full stop. Are we there?
Yes. Yeah.
Okay.
Yes, ma'am.
So we have two types of flag pattern, right? Now we have the two types of flag pattern: bullish flag, the bullish flag, comma, and the bearish flag, and the bearish flag. Full stop. Bullish flag and the bearish flag. Full stop. Now take a look at my screen. Of course. Okay, let's explain the bullish flag now. The bullish flag, just like the name implies, the bullish flag, just like the name implies, just like the name implies, is characterized or consists of a very strong buy move, very strong buy move, very strong buy moves, with short sales candles, short sell candles for pullback, with short sell candles for pullback. Remember we said the pullback is always weak. So that's a bullish flag. You're going to see a series of blue candles going up very big, then very short pullback. That's a bullish flag. Can I proceed?
Yes.
Okay, well, the bearish flag is just the opposite. So the bearish flag, the bearish flag pattern consists of a very strong sell move, a very strong sell move, very strong sell move with large body sell candles or big candles, big sell candles, followed by a very small buy retracement move. Full stop. Are we together? Can I proceed?
Yes, please.
Notes. Remember I said anytime I said notes, it's always important. Notes. The best time to trade a flag pattern when you spot it. The best time is usually after a breakout of a range. After a breakout of a range. After a breakout of a range. By range, I mean the ranging markets. Or in a very strong trending market. Or in a very strong trending market. In a very strong trending market. Strong trending market. Full stop. I've written that down.
Yes.
So now write this like a subheading. How to trade the bullish flag pattern. How to trade the bullish flag pattern. How to trade the bullish flag pattern. Full stop. That's like a subheading. Now right. 1. Enter a buy. Enter a buy on the break. Enter a buy on the breakout. On the breakout. above the eye of the flag. Enter a buy, meaning you can place a buy on the break, above the eye of the flag. Full stop. I'm going to explain that. Full stop. Now, what do I mean? Once you've written that, let me know. So everybody pay attention. Let me explain that. If you've written that down, so I can go ahead and explain what you just wrote, please drop a 1 on the chat box. Drop a 1 very quickly. Great. So what do I mean? This is what I mean. Look at the screen. This is what I call a bullish flag. This move up, of course, will be a buy move. Now, when it gets to a point, it will start selling. But you notice this move was very long as opposed to this sell move, right? So the time it's selling, meaning it's retracing, it's pulling back. Now, at some point, you now see the blue candle. Remember, we're on a bullish flag, so meaning you buy. You now see a buy candle that will break out of this pullback move that it has been making, this retracement. Now, when it breaks out of it, it's not confirmed yet. But this was the highest point this flag started from. Let me put an horizontal line. This was the highest point of this flag, is it not? This was the highest point of the flag, meaning this was where it started selling from. What's happening? I'm coming. Good. That point was the highest point of the flag. So the moment the market broke out of here, it's still buying, but it has not closed above this height, which was the highest point it started selling from. The moment the candle closes above this eye, maybe it's a little bit around here. Let's say your candle closes here. Let's say you had a candle that closed right here, right? By it closing here, of course, it's already above here. The moment that candle closed, you were meant to enter. So your entry point will be here. Are we together? If you get what I'm trying to explain, please put it on the chat box. So that's what I mean by you enter on the break. Meaning this was a pattern. The market broke out of the pattern from the moment it's there buying here. But until it closes above this height, the highest point where that sell pullback there from, then your flag is not complete yet. So you need for it to break and close. Let's say you see a candle that now close a strong buy candle. Remember, we said you're most likely going to find this pattern in a very impulsive market where the candles are very big. So you're going to see a big candle that will close above this pattern. The moment that candle closes, you enter for a buy. And of course, where is your TP, your next zone? The same way you've been picking TPs before in the market, that's the same way you pick your TP. And of course, your stop loss will be below the lowest point of that flag. Are we together? If you understood what I just explained, drop a 9 on the chat box. So my stop loss will most likely be here. If you understood, put a 9 on the chat box. Because what I'm trading is this pattern, right? So for this pattern to be no longer valid, of course, what it means is the market will no longer be buying. If you start pushing back and breaks below this same pullback, then it's no longer buying. So if you understand, drop a 9. I can only see only 1 9 on the chat box. If you don't understand, put an 8. Put an 8 if you don't understand very quickly. Put an 8. If you understand, everybody put a 9 again. I only saw one person's response. Put a 9 if you understand. Out enter it. Good. So it's not really hard because what you're trading is a flag pattern. So you enter when the market breaks. It's just still going to look like a break and retest. Remember, whenever the market breaks above the zone, that's still how it's going to look like. So you join the move, right? And your stop loss will be below. That's number 1 way. So I've already mentioned that. So what did we write in your book before? That you enter on the break. Number 2, write this down. You said we'll put your stop loss will be below the low of the flag, which is what I just mentioned on the screen right now. Your stop loss will be below the low of the flag, meaning the lowest point of the flag. Put your stop loss below it, and that's what you have on your screen. Have you written that down? Number 2. And number 3, your TP can be derived using the market structure or the zone, the same way you've always checked out. So you can use your TP based on the market structure. By market structure, I mean the next zone. So write that down. So I wouldn't expect anybody to come and ask me, Ma, where should I now put my TP? You should know when you're buying, you should know where is the next place you want to stop, right? That's how you have zones in the market. So if you prefer the next zone, you're fine. If you want to go another zone higher, it's on you. That's why people use TP1, TP2, TP3. Do you understand? So that's it. If you understand this bullish flag that I just explained, meaning how to trade it, you know where to enter from, you know where to put your stop loss, drop a 2 on the chat box. Drop a 2 on the chat box. Drop a 2. Great. So now let's write how to trade the bearish flag pattern. How to trade the bearish flag pattern. How to trade the bearish flag. You know, now we just read how to trade the bullish. So now how to trade the bearish flag pattern. Now look at my screen. This is the bearish flag, meaning the market is pulling down. So when it pulls back, it's going up. You can only trade it. This is where you enter when it breaks below, right? So this time around, right, enter on the break of the low points of the flag. Enter on the break. Enter a sell. Put it that way, enter a sell on the break of the low point of the flag. Enter a sell on the break of the low point of the sell. First stop. Of course, by break, I mean a candle must have closed below this point, right? That's what I mean by enter on the break. So that's number 1. Then 2, your stop loss will be above the eye of the flag. Remember, you're selling, so you want to keep going down. So write this, your stop loss will be above the eye of the flag. Your stop loss will be above the eye of the flag. So let's say this is the highest point of the flag. You can count like extra 20 pips, right? And just put it up a bit above it so that, you know, this market will not eat your stop loss and then still continue down. So you can just put like a little bit of pips to give it a little bit of buffer effect so that you won't get knocked out. So that's why we say your stop loss will be just above the eye of that flag pattern. And number 3, of course, everybody knows where your TP will be, right? Your TP, you can always use the next support or based on the market structure. So write that down for TP. Your TP can be the next support zone or based on the zones or the market structure. First stop. So are we together?
Yeah.
Okay, somebody should go to EuroJPY. Let me meet somebody who is ready to share their screen. I know it can't be Toby, he's on the road. So either Sabina.
Let me share my screen.
Who wants to go?
Let me share my screen.
Okay, good, man. So I've made you co-hosts. Go to your MetaTrader. You can go to EuroJPY. Remember when you want to, remember even when I give you assignments and I say go and look for flag patterns, remember the conditions where you find a flag pattern. I told you, you find it in a very trendy market. So you go and look for markets with strong moves like that, right? You see them there. So ma, go to EuroJPY. You can go on H1, EuroJPY.
What's there?
Euro JPY. Go to the chat on Euro JPY. Oh, I've been busy and the market has been doing wonders. On H1, H1, H1. I saw someone H1. Zoom your screen, zoom it a bit. Okay, good. Now, I don't know if you're seeing you're showing me the range. Oh, I don't want to say range. I expect you yourself to locate itself because you say we're going to see a strong buy move followed by short candle. So if you're going inside a range, then you are looking in the wrong place. Go to where you should not be ranging in this, your chart. Matt, towards the end. Don't go to the past. It's already towards the end. It's there if you look very well.
This
Look
one.
at it. You can see strong
Okay.
big buy candles, then short
Yes,
pullback.
yes.
You can see something
Yes.
looking like the flag. So because if you were waiting for where this market first broke out from, for the market to come and retest, it might not come back there. But notice how it did a pullback. So, let's say this first one, can you put mark out the zone? I want you to mark out the zone where you see the flags. Good. Exactly. That's now you can see that cell very short. But before that,
Yes.
small candles for the cells. You can see we had like 4 big buy candles.
Big buy candles.
Good.
Yes.
Now, can you see that cell did not get to where that big candle first broke out from? I want you to mark out the zone where the candle broke out from.
Where the buy candle broke out from,
First
right?
broke out from. Yes, it broke out of the ring. No, below there now, there are 4 candles. I said there was one, the very first one out of the 4 candles. It broke out of. Good. You can see, did the market come back there to retest? No, right? But it did a mini flag.
No, it doesn't.
So in this case, if you had joined the buy, your stop loss will just be below that mini flag area. That's the lowest point. What was the lowest point of that flag? That's the 146.98 line she put there. You can see that was where the sell got to. So in this case, I would not just put my stop loss around that 146 because the market can still eat it. I'll take my stop loss a little bit below it. So move this, your 139 line. So go and place the stop loss. Pick a stop loss, man. Move this line. Put it to where you will put stop loss. Stop loss means below your entry. Now you are buying the flag. So how can your stop loss be above the buy?
Sorry.
Yeah.
So it will be somewhere
give
here.
It's too wide. That's too wide. So you can just give it a little bit below. So let's say you're entering. In fact, even this is too much for me. I'll still move it up. Because you see, where did I tell you your entry will be? When the pattern is good, like that. Remember I told you, you buy when a candle closes above the flag pattern. Now, which candle broke out of the flag? Can you put an horizontal line to the blue candle, meaning you must have seen a buy candle that broke out of that flag.
This one broke out of the flag.
So right from the moment that candle closed, yes, that big blue candle, it closed right on the height of the flag. The height of that flag was that red. Good. The very first red that started there.
Yeah.
Of it. That was the height of it. So the moment you can see that blue candle closed above it, you would have picked your buy entry. And you can see what happened later. The next candle, the market bought. Can you see? So you would have made some money from your entry points to the next candle. What did you see again? Can you see? There was another flag pattern again.
Flag, yes.
Then strong blue candles. You see, that's why I told you in your note that the impulsive move are always bigger candles, while the sell candles are always short. Now scroll up, man. I want to see the upper part of that your screen.
I should scroll up.
No, don't put lines. Just go. Good. You can see. So the market was really buying, really, and just 1 or 2 sell moves. So there was another one at the top where you had just that one red candle. In that case, yes, good. Your stop loss would have been below it, and of course, when that candle broke out, you had entered your buy up to where it is right now. You would have made some money. So I hope we saw an example of how a flag pattern looks. You can tell this is not your usual pullback you normally see. Yes or no, ladies and gentlemen?
Yes.
Good. So that is how this pattern looks. So the assignment is this.
Please, I have a
Everyone is
question.
looking like 5 flag patterns and tell me whether this is a bullish pattern or a bearish. You're going to send me the screenshot. You can circle the area, send me the screenshots. All right, that's your assignment. Then an head and shoulder pattern. You look for 5 inverted head and shoulder. Sorry, today was inverted head. So look for 5 inverted head and shoulder patterns. And you also send it. Any question, ladies and gentlemen?
Yes, I have a question. Is it just only on H1 and below, or
No,
H1 and above?
no. Of course not. I just shown you because I was going through my phone, so I just saw it on each one and it was very clear. That was why I brought you here straight. Do you understand? All you need to go and do, if
Yes.
you're looking for this, go and look for market that are very trending. Do you understand? Like the
Mm.
momentum is much. When momentum is much, you can tell. Look at the buy candles are very big. It tells you the buyer
Very
in this
big,
market is
yes.
very strong. It's so strong that they are not even giving room for the sellers. That's why the selling candles are so short. Do you understand? That's why we have
Yes.
this pattern. So it doesn't mean, oh, you're going to find it on 1 hour. No, I just opened my chat and I saw Euro JPY on 1 hour. That's why I just took you there to see an example. Any question, ladies and gentlemen? No other question, right? So I'll be expecting an assignment latest tomorrow. All right. In the absence of none, please your assignment latest tomorrow. All right. Thank you and have an amazing evening. You can ask for the recording later. I'll forward it to you.
No, thank you very much.
You're welcome.